Hello and welcome to our weekly podcast here at Streetwise Economics with my colleague here, Coach Blooming Omorin, where we talk about money and the markets. And the reason why we talk about money and the markets, at least for us, this is something that we do. We are so fascinated every day to watch what is going on in the market. And as you can see here, you can see this is the S&P 500. It's trading live here. And as to the agenda of the day, we are going to be, first of all, sharing our insights on what is currently going on in the market. And I can see on Bloomberg TV that President Trump is actually speaking, and we'll talk more about insights about the tariffs, but also how we are adjusting to this volatile market environment in our respective portfolio. But allow me to welcome my colleague here, Coach Blooming. Welcome, Coach.
Thank you, buddy. Let's jump in.
Fantastic. And what you see here, this is the S&P 500 index. And for those who don't know, this is the trading view software. Basically, I have some bunch of some candles here, and that's what we call technical analysis. In other words, we try to use to make out some patterns from these candles, because they do indicate some price action, right? Because this is an indication that they are net sellers in the market, right? And what has been happening is that this week, technically, the S&P 500 dropped by at least 10%. And what this means is that a lot of people were panicking. And this is what is technically called a correction. And I'm just going to show you here that this is a chart for a year to date. And you can see that the S&P 500 from the right, from when it was at the top at about 6,138 to around here, you can see that it went down by 641 points, which is about 10.45%. And a lot of people were panicking to say, look, is this going to continue happening? What's happening, and what is causing this? And I'm sure, Coach, you have some insights on this. But before you jump in, I see today is a green day. You see stocks such as Nvidia, they're up 5.3%. Tesla has had a very fantastic comeback. You can see here that it has really gotten up, but at least it is still down 50% from the top post-President Trump's election victory, when we saw Tesla stock really going up. So you can see here that technically Tesla has really gone down by almost 56%. What this means is that if someone got in at $487.96 and they were short-term trader and they'd gotten in long, that means they are buying with the expectation to sell higher. It means they are actually 50% down. And we have some insights to share about this, Coach. But before I do that here, I want to indicate something that I've been noticing in my technical analysis here, because we use fundamentals to look at the valuation of companies and also technical analysis. You can see here that this shows the net funds inflow. In other words, the big institutions which can really move the market were really pushing the market up for this better part of this time frame. You can see from this was around October 25th, the market was ripping up, and you can see this blue. In other words, they were getting in. This is something that I've started to pay attention to. As a retail investor, I want to be thinking like big institutions, because if you want to go against these guys, you see the result is that if they were getting out and you were getting in, right now you would be under the water, like, yeah, in this case, 50%. Same applies to the S&P 500. If you look at it, they were pushing the market, but sometimes the market goes up and down. But you can see that each time these big funds, it's on the green, the market is going up. And when it's down right now, most of the money, it means it's sitting down on the sideline. And hence the market has had a pullback. And we have some thoughts and some theories on this, but I wanted to have Coach chime in. What do you think, Coach, is happening here?
There's so many things going on in the market this week. I mean, right from uncertainty or surrounding tariffs, then possibility of a recession. I mean, there's so many things, then geopolitical tension too. And I mean, the stock market and even the crypto market has been all over the map. I mean, since the beginning of this year. But as a long-term investor, if you have cash, just keep DCAing,
Mhm.
especially when we saw that on Monday, the market really it was just all red, literally all
Mhm.
red. And at the end of the week, less than 5 days later, we're saying that the market is green. So again, if you're a long-term investor and you believe in the long-term and you believe in the long-term thesis of the
Yeah.
US stock market, you will be good. But for people that got into Tesla at 480 something and they were expecting it to go to 600 in the
1,000.
short term. So again, most people come into Tesla or or we can say Tesla, Nvidia, or even Facebook. Facebook went as high as 720 or 25.
Meta,
It
right?
dipped, yeah, it dipped this week to under $600, right? So again, for all of these companies, I tend to look at them like a long-term play. Do we have the short-term volatilities? Yes, we do. And we don't even know how long this is going to be for. I see that when I look at the bonds rate, the rate is going down. It just means that investors are panicking. They are going into something that is safe compared to the stock market. And
The
for me, I
dollar
don't,
or
yeah,
gold or
yeah,
other fixed
yeah.
income
So,
instruments.
yep. So they just want something stable, something that at least they can preserve their capital. But for me, if you understand the long-term thesis and the long-term play, because I tend to look at different things too. If we look at the fear and greed index, it's telling us a story that investors are afraid. And usually, historically, that has been the best time to DCA. The best time to DCA would not be when the market is going up. And
Yes.
that's be the case for Tesla at 489 or Meta at 720, 725 or Nvidia at 145. So
Yes.
again, as a long-term investor, the short-term volatility is a benefit. It's a gain for us if you understand how to play your cards well. So that's my
Yes.
take on the market for this week.
This is very interesting, and we'll dive into how we are adjusting our respective portfolios in a short moment. But I wanted to just say something that we have always said on this podcast, that these are two friends who happen to like to talk about money and the markets, and this conversation should not be taken as investment advice. But having said that, what I like about my conversation with Coach Blooming is that most of the insights that we share here is what we are doing, and we are learning. We are students of the market. And one thing that has been a very interesting teaching moment for me is that if you can use volatility to your advantage, you can potentially make money, because volatility in this case, if the market is down, like today, I can see that President Trump is talking in White House on Bloomberg here. S&P 500 is 2.8%, 2.13% up today. That means from the down yesterday. So if you had gotten in at that point, you could be 2% up. But the thing is, trading and investing are different. When I'm trading, my approach is different. Is I'm possibly looking at minute by minute. But what I have observed is that big institutions, they tend to have, at least my view, a longer term perspective, right? And they kind of move the market sometimes in a big way, but most of the time retailers get banned because
Yeah,
you
haircut.
know because sometimes people want to make quick gains, which is a very difficult thing to do. So I like to first of all look at the fundamentals, like you have said here. And if at least I want to invest for the long term, I want to also have an emergence fund, so that times like this, when the market pulls back 10%, 20%, I could be even adding more shares for those
Yep.
wonderful companies that I will have, researched on. Not to just jump into any stock, especially those stocks that have a lot of debt. Coach, I want to get your view on why do you think the market has been dropping like this?
So again, like there are so many moving parts. We're
Yes.
seeing the case for tariff. Tariff is on today, tomorrow is off. Oh, it's suspended for a month, then we're back to it. Yes, so I mean, investors don't like uncertainty. And once we
Yes,
have uncertainty in the market, you tend to spoof the market. We want
definitely.
something that we can easily predict. And if you're not giving us that option, there's always that possibility that we're going to be scared. And I mean, me, I like the volatility in the market. It's
Yes.
giving me the opportunity to buy. But when I look at what the fear gauge is telling me, it's telling me a story that, hey, I don't want to put my money in the equities. I just want to stay in bonds, right? That's
Yeah.
how some people are playing it. And because of the uncertainty in the market, we don't know how that is, how long we're going to be in this downturn for.
Yeah.
We don't know what the US president is going to say or do or tweet. Those are some uncertainties that we're not even aware of. We're talking about Ukraine and Russia. What are the possibility of getting the ceasefire deals on that? As an
Hmm.
investor, I look at all of those moving parts and I want to make sure that when I put my money in the market, at least it can come back with some more soldiers for me, right? But if
Hmm.
I don't have that certainty in the market, yeah, we're going to see all of this volatility in the market. So to me, that's just one of the things that is going on, the uncertainty about tariffs. We don't know how long that is going on. And we should not even forget the Doge policy stills, right? These are austerity measures. The possibility that somebody can lose their jobs. I mean, that is not cool. That is not, even though yet long term is good for the economy, but investors or consumers can be uncertain about that. And if you know that there's a possibility for you to lose your job, you would not spend, you would not invest,
Yeah.
you would just be
And
very
even the
conservative.
And even the
Yeah,
consumer confidence, it actually dropped, I think,
it
to about
dropped this week. Yeah,
98%. But I wanted
yeah.
to kind of like give another perspective here, Coach. I had a conversation with my ex-Wall Street analyst yesterday. We had a call. I'm the kind of a person who like to have conversation with broad people from broad spectrum and kind of hear what
The
they
same.
think. And sometimes
Mhm.
even if I go on the grocery store, if I get in an Uber, the other time I was talking to the Uber driver for the Uber that I took, and he was like, things are really hard. I'm struggling to meet my mortgage. And on aggregate, if I then look at that, it kind of like gives me a perspective. But my ex-Wall Street friend was telling me that yes, the Doge, they could do a good job if they really can cut back about 1 trillion. But the reality is that from the federal employees, they are not as much. It's not a big budget compared to the state, to other workers that are there, right? And also, if you look at the Department of Defense. So if you look at it statistically, the big impact, if they can cut the Department of Defense budget and cut that trillion, it's going to knock down on the treasury bills, reducing the, hopefully inflation is not going to resurge again. But in terms of repositioning myself, like I said, I want to have a long-term outlook to say President Trump is going to be there at least for the next 4 years. So my
Mhm.
time horizon is like I would expect this volatility here. Thankfully, here in Canada, I like the new Prime Minister Mark Carney, and I hope he is going to kind of like removed a lot of uncertainty. And once we have an election, which should come, I think, by October this year, right? That
Mhm.
uncertainty is going to clear. But the good thing is that if you are able to identify wonderful companies at this point in this aura of uncertainty, after you will be able, you will thank yourself later. And again, investing can be personal. Some people might be going on bonds because think of it, if you are retiring maybe next month, you don't want
Outgoing
that
bonds,
portfolio to go to go down 40,
50%.
50%, right? And it's real. I saw my portfolio drop, my trading portfolio. And one thing that I've realized is today the market has bounced up back. But because if I look at it like this other psychological instinct that I have is like, I should sell, even though if you know that the fundamentals of this stock are intact. And again, sometimes you might be wrong. Even Warren Buffett has been wrong. And again, another interesting thing my friend shared with me was that Warren Buffett is the master of this game. Now he's old. I have great respect for the guy. But in terms of their stock, it has been able to hold up. There are not many stocks that are still kind of like holding close to their all-time high. I think they have almost 50% in cash. And what that means, they might be considering taking up some interesting deals, but also when the market is down, right? But
Right.
the thing is, at the end of the day, most of the people who invest in equities, they tend to outperform those people who are in bonds and in cash. That's just the historical fact. At least if you invest in equities in things that
That are good.
perform. Yes, not everything that you see out there. So, coach,
Yeah. I think
how
sometimes, yeah, go ahead.
how are you then repositioning your portfolio? I know you and I we talk quite a lot then, but you feel
Yeah.
free to comment even on some of the things or push back, so to say.
Yeah, I think sometimes if because I tend to just only invest in the US market.
Yes.
And when you zoom out, you tend to see the bigger picture, and I tend to lean more on the bigger picture than just the short-term noise.
Yes.
Again, I like to separate the noise from the signal. What is the signal? What is the meat? What is the core of this conversation about the stock market or crypto? If I
Mm-hmm.
zoom out over a 5-year period, over a 10-year period, or 20-year, I can see that historically the US market goes up. For
Mm-hmm.
example, the S&P 500. But there's been moments like the 2020, 2022, 23 that the market was down.
Mm-hmm.
And for people that knew how to position themselves in the market, they've been rewarded handsomely. A similar thing is playing out right now with the new administration. Yes, the stock market has been going down. We've seen the S&P 500 in the correction territory. Tesla has dropped over 50% from the November, December highs. And a lot of people might be
And
panicking.
by the way, in the interest of full disclosure, coach, you might want to just say out
I mean,
you
all of
hold.
my social media platforms, you can easily tell I'm a Tesla fangirl. Like, I mean, I'm not even mincing word, like literally, because why? Literally a substantial part of my portfolio is in Tesla. But apart from that, when I zoom out and I take out the noise, why is the new administration doing this? We're talking about the debt situation
Almost
in
36 trillion, I
yeah,
think
in
the
the
last time I
US.
checked.
That is not sustainable. And if that is not sustainable, and Jerome Powell cannot just cut interest rate, what can the new cabinet do to make sure that they can spook the market? If they spook the market, the bonds rate comes down. If that comes down, that is going to feed into mortgage, that's going to feed into credit card. At least the consumers can start spending, or J Powell will be forced to cut interest rate. This
Yeah.
again, if you understand the cycle, you'll be able
Yes.
to look at the big picture that, hey, they're doing this.
Yes.
Maybe the next 6 months can be volatile, but this is
Yes.
not going to be for the longest time. Like we can be in this for 18, 24 months because why? They
Mm-hmm.
also need to position themselves from the midterm elections.
Yes.
So if the stock market is not doing well, for the next 6 months, it's good. But if they can position themselves for something greater, maybe over the next 12 and 18 months, by the time is the midterm election in the US, it's positive for the Republicans, like literally. So again, I tend to just zoom out at why are they doing this? If I understand the why, I can position myself. Am I scared that my portfolio is down 40%, 50%? Even check, like literally, I don't check. Whether
Mm-hmm.
I'm down 50,000, 100,000, 200,000, it doesn't even matter to me because why?
In the short
I just,
term.
yeah, in the short term. It just means that if I can capitalize on this and I buy more when the market is down, I'm looking at the fear, and the fear gauge is telling me we're in the extreme fear territory. This again, as a student of the market, I know that this is when I need to position myself and go the hell out of shopping. Just shop, shop, shop fundamentally strong companies. And I sit back. And over the next 15 or 18 or 2 years, I'll be good, meaning 18 months, 2 years from now, I'll be good. Because most people, when they come into the market, they want to win so fast. And I'm like, hey, I'm playing here for the long time, 5, 10, 15, 20 years. I'm not playing for 1 week or 2 weeks or 3 months. No, I'm here for 5, 10, 20 years. That's how I want to win in the stock market and also in crypto. But this might not appeal to everybody, which is understandable. And again, investing is such a personal strategy. What works for me is certainly not going to work for any other person because why?
Mm.
I understand my risk tolerance, my risk profile. There are some stocks that I wake up and I want to know what is going on. And there are some I don't care about them. So, but that's just my own investment style. But it doesn't
Mhm.
mean that we're going to be in this bear territory or in this correction territory for the next 24 months. I don't think that's possible, but that's just my own personal opinion. Maybe I could be wrong. I mean, I could be totally wrong. Like,
Oh,
I
you
could be
could
totally
be you
wrong.
could be right, but the good thing is you're playing with your own money. You're not managing someone's money, right?
It's just my
So
money and I'm playing
you can
with it and
afford
I'm comfortable.
you
Yes,
can afford to
I'm
make some
comfortable with
mistakes.
it.
Yeah.
Yep,
Oh, so I
yep.
wanted to also bring another perspective because you mentioned that the US over the long term has been shown in at least the equities market to outperform any other market. Um, I have a friend who trades futures, and he was telling me that usually the euro, from his observation, right, when the S&P 500 is dropping, the euro versus the US dollar, the euro is going up. So he has been trading the euro and US pair. So sometimes what I'm learning is that if you really want to be successful in this market, at least from my experience, you really have to focus on a few other things that you can really get to know very well, whether if you can go on the futures, the current pairs, if you want to focus on gold, understand the trends and stuff, and or in the equities. I have a few stocks that I know like the palm of my hand. Now, the beauty of that is that now you can kind of like profit from or position yourself from that particular volatility, but without ignoring the macroeconomic picture, because even those businesses or those particular securities, they get impacted by the the macroeconomics, whether we are talking about the tariffs, uncertainty, what is happening politically. But I like to also zoom out, like you said, Coach Blooming, the long-term perspective. Now, so how are you repositioning your portfolio right now? I know you are doing covered calls. What has been your learning moments with covered calls? Because it has been a
Oh,
bearish market.
oh my goodness, I bet this week has been a learning moment, which I'm not even going to share yet until
Right.
I have
Yeah.
the
Yeah.
how can I put it, the whole
You have it,
case
let
for
it
the
play out.
decisions. Yes, like I want it to play out well, but again, the way that I'm positioning myself, number one, for my long-term plays, Tesla, Palantir, Nvidia, Apple. MicroStrategy is more of a medium term, short to medium term play.
Yeah. The speculative
Those,
plan.
full disclosure, those are the stocks that I own. Apart from some that I'm trading that, no,
Yeah.
I'm not going
Yeah.
to talk about those ones.
Yeah.
But aside that, I don't care about what is happening in the short term because
Yes.
again, I'm such a long-term investor that I just look at if nothing has fundamentally changed about a company,
Hmm.
I don't do anything.
And even
I just stick.
structurally, are you not worried about what's happening with Tesla in the short term, with Elon
Actually,
being at the top of the
no,
MAGA movement?
no. So for me, like I was having this conversation in a group this morning, and I said that until something fundamentally changes about Tesla, I will keep buying. Why? I separate the noise from the signal. I separate the noise from the meat. Why? When somebody has given me a solid track record of execution, you have a history of doing the impossible,
Yeah.
and I can see those progress. I don't know how to build reusable rocket. I don't know how to build electric cars. I don't know how to buy a social media company and fire 80% of the workforce, and the company still
Mhm.
survives. And the company was very instrumental in the last US election. You're building the boring company because you're avoiding traffic. You're building Neuralink that you can put chips in somebody's brain and you can text with your
No,
mind.
no, no doubt he's the smartest person, but I want to poke that horse
Yes.
further on that thesis. And of course, I'm definitely considering Tesla as well. But
Yes.
I think there's also a limit. What about the declining profit margins? What about also, I know there's a possibility of the like having the self-driving self-driving, what do you call these
Self-driving cars, the robot
cars?
taxi.
That
Yes,
that will
the
be a game
cyber cab.
changer if they are introduced in Texas, at least this year, I think in June or whenever they will. But I think for me, of course, somebody had to do the job to kind of like rein in and bring in some fiscal prudence in the US government. I'm such a good a believer in that, but I think also to this extent that it possibly alienating some clients, some customers around the world, but we'll see the net impact. Time will tell.
Again,
But fundamentally, I know they have a lot of cash on their balance sheet. I know
yes.
because he has some executives. But I wanted to say there was this other billionaire who invested in Tesla. I think Baron something who invested in Tesla.
Baron
He
has been
was on
investing in
CNBC.
Tesla. Yeah,
CNBC is looking at long term. There's also this analyst out. He said,
and
I
I've
think it's time for Elon Musk to come back and lead this AI revolution from the front. But again, what's your
so
thoughts on that?
again, when I see a company,
Yeah,
until something fundamentally changes about the company, I separate the noise. When
yeah.
you're doing something that is impossible, something that is hard, you're going to rescue NASA astronaut that's been stranded for months. Who has that intelligence?
Coach, I think from what I saw, I read Paul Krugman. They said I think they were due to come back at that time, right? I think some of the things, I mean, without being political about
This
this,
was
right?
supposed to be for Boeing. This was
Yeah,
supposed to be Boeing to
yeah,
do this for NASA.
yeah. But
They got the funding.
what I'm trying to say, Coach, from the art, at least from the article that I read, let me take for example.
Yeah,
I like they said they were supposed to come. It's not like they were stranded. I don't know the full story,
they're
but
stranded.
I have no doubt Elon is very
Equipment that was
smart.
supposed to bring them
Mhm.
failed, and the equipment had to come back on its own, and they are still stuck there. And they came to Elon, come and rescue us.
Oh,
When
no
you
doubt.
see,
Yeah.
when you see somebody that has a track record of that, and I'm just sitting and say, oh, in the short term, your profit went down. And I'm like, okay, double click into that. Why did this happen? Because again, I tend to focus on the why. If you don't understand the why, you will just read the headline and invest based on the headline. I don't invest based on headline. I double click. I understand the why. We are not
Mhm.
talking about the remodeling. We are not talking about, oh, okay, this is what is going on. This is why this is going on.
Mhm.
When I look at Tesla, is he popular amongst everybody? No, he's not. But this is the crazy guy that said he was going to build electric cars, which seemed
Some
impossible
years
10
back.
years ago.
Yeah. Yeah.
And now he's telling
Mhm.
us that we're going to have cybercab. I mean, the fact that we are going to have a car that is smart enough to drive by itself, that is the future we're going into.
But
So when I look at that,
In China, they already have those, right? That
they
right?
have those, but are they profitable?
I
Like
think
when, like,
BYD and other companies. But again,
no.
I'm looking
When we
into Tesla as
compare the
well. Mhm.
profitability of BYD to Tesla, Tesla still trumps that. BYD has about
Yes.
54 or 45 SKUs.
Mhm.
Tesla has just maybe 4 or 5. So when complexity appeals to, I don't want to use a bad word, I mean,
Yeah.
simplicity is a higher
Yeah.
sophistication. But
Yeah.
if you don't understand that it's not really about, oh, I have these tons of skills to sell. No. But when you concentrate and you're looking at this, is one of the smartest guy. Yes,
No
you're not
doubt.
going
Yeah.
to appeal to a lot of people. But again, until something fundamentally changes, Tesla keeps executing. If he doesn't execute, if he tells me that, oh, we're going to have robot taxis, and I look at this in the next 5 years, he still does not execute, then that's a problem. But I'm looking at this, I'm like, he keeps executing, and people just keep
Yeah.
hating on him, which is
Yeah.
understandable. Is he
Yeah.
going to get everything right? 1,000%? No. He's going to
Yeah.
miss
That's
some
not
things.
possible.
But again, I tend to zoom out. What is the big picture?
Yes.
What is the life is trying to create? And that's just me. Do I believe in this? Yes, I believe in Tesla. But that's just,
No,
wait,
no, no. I
don't believe
totally
what I'm
agree.
saying.
Well,
Don't believe what I'm
I
saying.
mean, the good thing is we talk, and I'm also seriously considering Tesla. Who knows? Maybe next week I might be.
Tesla
You
is
know,
wild.
yeah,
Tesla is wild.
but
It's wild.
I like to invest like what Charlie Munger, the late Charlie Munger, may so rest in peace, said. I like to invest and to look at, the other side of thing. And also even Ray Dalio, he also likes to have other people poke holes into his thesis. Now let's move on to economic data. I think that's something that has been driving some volatility, at least in my view. We had the Bank of Canada, they reduced
Record
rate
interest rate this week.
from
Yes.
3% to 2.75%.
75
That was 25 basis points.
basis point.
And obviously, it's gonna cause the cost of borrowing to be cheaper, or things constant, but also it's, I think, a sign that the Canadian economy might
It's
be taking a
weakening.
hit, is weakening, which is
Yes.
good. And most likely the Canadian dollar, it has already depreciated, but I see this maybe as a short-term thing. We will see, time will tell. But also in terms of the economic data here, the producer price index, I think it was zero. It was not really, it didn't go up. Inflation, it came up low, came out lower than expected.
So
But my conversation with my ex-Wall Street friend, he said, look, I think the full impact of the tariffs have not yet been priced in. That's there's a time lag. So probably we'll see in the future. But what I know is the Atlanta Fed that tracks the GDP in real time, it's forecasting that possibly the GDP is going to be down, right? At least we'll see this. So, but we'll see in the future. I am looking for companies to shop. I have a bit of cash in my portfolio, so I'm excited. I will be looking forward to sharing some of the holdings that I will have shopped around. I'm just hoping the market is going to go down even further.
now
But
you have some cash.
now that I have some cash, but uh, one of my other friends, we talk about the market whole day, like these folks at Bloomberg TV. He said, I think on March 25th, there will be quad winging. You know, when these contracts, option contracts expire, you call it
Bias.
quad witching, right?
Triple witching.
Yeah. Uh,
Triple witching. Three.
okay, fine. So, and what I've seen is that, the equities market, usually the stock market is forward looking. So maybe that might be another, because usually what I've seen, these big institutions, sometimes they can possibly move the market down, even if they want to get out, at least from the funds flow that I see, they tend to, move the market sometimes not in a straight line, up and down in waves. So I'm hoping Mr. Market is going to be red next week. At least today I was
Fingers crossed.
disappointed.
We'll see. Fingers crossed. I mean, 47 might say something that might spook the market.
I
You
love it
never can tell.
when he says that. I didn't tell you this. I like to watch, money markets and stuff. And there was this commentator who came on, I think it was on Bloomberg TV, and he was like, right now I don't even want to look at my portfolio.
Not
And
looking at my portfolio too.
yes, and the most interesting thing is like also when they ask fund managers, like, right now, what are you saying to your clients? And one thing that was interesting was that they said usually their friends and family, when the market drops 2-3%, they don't call. But now this week, they said their friends and families, they started calling, hey, what's going on in the market? And I was like, this is just a 10% drop. Now, my theory is that I think those people who use leverage, and if the
Hmm.
trade doesn't go your
Those,
way, in this case, it
yeah.
means you'll just be forced to sell by the margin call. That's something that I've tried to avoid using leverage, right? And what's your view on that? What do you see in terms of the future outlook, coach? I know we have some data, the Fed rate, in the US, they are going to make a decision, but people are kind of like, they're not expecting the Fed to change their stance, the rates. But if they do something unexpected, then that's what might cause the market to be quite even more volatile.
Yeah. So just for simplicity, I think the key word for this week for me is when you zoom out, you can see the bigger picture. And if you understand the bigger picture, you can strategically position yourself. Whatever is happening in the stock market or in crypto this week, or even for the next 1 or 2 months or 3 months, to me, it's just noise. Noise in the sense that whatever is going to happen for the next few months or the next few weeks, if I zoom out, I won't even see that impact. The fact that we're able to survive the pandemic, then we went into 2022, which was four bearish seasons, 2022, 2023. We came out of those seasons. Again, the market cannot stay in the gutters for too long. And how am I positioning myself? Number one, I'm not looking at my long-term portfolio. My eyes are sealed. I'm not looking at my portfolio.
Yeah.
Number two, I'm still learning and using the cover call strategy. The
Mhm.
more cash I have, I continue to buy fundamentally strong companies.
And
And I just
diversify.
ignore, yes, I just ignore what is going on right now. And apart from that, that's all I'm doing. Because why? If I keep waiting for the perfect time to get into the market, it just reminds me of time in the market beats time in the market. And I'm looking at,
Yeah, I
hey,
think Peter Lynch,
engage.
that was a master
Yeah, it
stroke
said so.
because yeah, if you
Yes.
miss few days when the market is
Few
gonna rally
days.
up, your
You missed
overall
10,
return might be
20%.
lower. Lower.
Yes.
Mhm. I
So again,
yeah.
I tell myself, Blooming, you're not smart enough to understand when to buy and to sell. Just again, something simple. The fear and greed index is telling you we're in the extreme fear territory. I buy if I
At
have the
least you buy
cash.
on a red day, I suppose, right?
Yes. And I only buy fundamentally strong
Yeah,
companies,
very
companies that
important.
I plan on holding for 5, 10, 15, 20 years. Those are the companies that I'm buying. Aside from that, investing is not complicated if you
And
know what you
also
are doing.
and also companies that we understand. I like to
Yeah,
stay in my circle of competence. Okay,
yep.
that's interesting. I
You don't understand the business, you have no business being in the business. That's investing. If you don't understand it, don't buy it. Don't say because I had somebody on the internet telling me to buy Tesla. No. Or telling you to buy Palantir. No. What if something changes and Blooming is not in the picture? Then you say, oh, Blooming told me to buy this. No, don't do that. Don't like only invest in companies that you're comfortable with. You understand the business. If the company drops 50%, you're still comfortable buying it. But if you cannot sleep, if the company drops 10%, don't buy. Don't
yes.
invest it in. Or just do an index fund, S&P 500. You're good.
Yeah, if you are not smart enough to look into to spend, time,
Technicals and
monitoring.
understand that. Yeah.
Yeah.
Just do the
Hmm.
S&P 500 or the QQQ. You'll be good and stay long
Again,
term.
this is not investment advice. Again, it's you have to be smart enough to protect your money because it's your money. If you lose it,
It's your call. If
it's
you
your
make
call.
money, it's your call. Yeah.
But at least these are some of the observations and experiences that we are having by participating in the market. Is there something that you would say to audience who may be listening, Coach, that
I mean, hmm.
right now when the market is like very volatile, and I think you've said that enough,
I
but
think I've said it already. Don't look at your portfolio, do your long-term portfolio. If you have cash, keep this here into strong companies. And as always, may the market be in your favor.
that's wonderful, and you couldn't have said it much better. I'm looking forward to having you guys on this show again. But if you haven't subscribed, please make sure you subscribe on our respective channels. We will send our respective links here. But what we are trying to do is to democratize wealth building, right? At the end of the day, we are not the monopoly of these insights, but we are just sharing our insights. Sometimes we make mistakes, and these mistakes, I wouldn't want you guys to do those mistakes because unfortunately, in this capitalist market, if you make a mistake, the market, you lose
Well,
money. You lose money, and sometimes it can take you 10, 15 years back. So I wouldn't want my child to make the kind of mistakes that I am making. Now, thank you so much for the privilege of your time. Until next time, bye bye for now.